All right, Red Dog, how's it going? I'm coming to you. Can't see me, but you could hear me. How you doing, Matt?
I'm doing all right. You know what? I was actually sitting in the backstage in the green room eating my, what'd you have, bonbons and M&Ms for me. And I was listening to the conversation, and it's just, it's funny stuff. Like, you guys are getting older like me. We've all been experienced. We've all been around. And I have friends also who come to me and say, like, what should I just be doing in this market? And some people are like, you're an active trader. Do your gains outpace, the S&P if I just put money in the S&P every month? How should I do this? How should I do that? And I feel like over the course, I started in 1997. When did you guys start? Dennis, when did you start? Joel, when did you start?
Actually, that's funny. 1997, I believe, retail, and then I went professional with Bright Trading 1999.
So we experienced the tech bubble bursting in 2000. We experienced the financial crisis of 2000, 2007, 8. Okay, it's actually my son's 16th birthday was this weekend, and I got him the card, where it says what happened in 2008, and it's talked about the financial crisis, the housing crisis, every crisis underneath the sun. So we were out trading then, at a friggin' 3 to 6 month old crying for 24 hours a day. So I'm like, wow, I really handled a lot back then, but. We also learned that, if you put money in every single month over the course of time, it'll help your average cost. And that's what my wife's long-term account did when she was working at UMDNJ, which is now the Blood in the Street account, which I'll get to, and then there were people that blew up, right? People that blew up if they bought a dip too early in 2007, 2008. And then there were people who blew up that said, hey, we're not going to continue this rally. We have to test levels, and they blew up short. And then you had the pandemic, which is, I think, where we were all had our best year because we learned, that things can go lower faster. We can get out of the way, and things could bounce back and not go back and retest. And, the things bounce back so damn fast in the pandemic, that there were guys that, blew up buying too early and shorting too early, right? Those things happen every friggin' which way. So this summer happened, right? July, we fell like 9-10% from the highs. So the same thing happened, right? Some people blew up buying too early into that Monday. That was chaotic. And then, some people probably lost money in the last, part of this rally, because a lot of people were saying that we were going to fail at like 545 in the SPYs after a move from 510, and we went all the way back to highs. So a lot of different ways to make or lose money. So you have to know your time frame. So the fact of the matter is, if you do not trade actively for a living like we do, you probably should just do a 401k funds every single month.
Yeah.
And then when you see markets in turmoil, add to it. Put money, put an extra, monthly install, and then that's how you get your alpha. But the reason why we do what we do and people follow us is because there are people who trade for a living that need to make money and time the market in August. They need to make net money in September. Or they get paid quarterly. So that's why, we do what we do. We have our rules. We have our process. Sometimes we feel awesome. Sometimes the market's a pain in the arse, and that's why we get up so early, because it's not easy to carve out pieces of stocks and charts and whatnot. And otherwise everyone would be doing it. And I don't know, a lot of people still doing it from when we started. There's a handful of us, but it can be done. And, you have to make sure you're just even keel enough to, when things are choppy, like the last 2 weeks in the S&P, where it looked like we were going to break below 557 in the SPYs, and then above 563, then below 557, we need to just, not get too frustrated and just wait to see when the range does either break below or break above, and make sure we're not worn out enough, which is what I think traders are trying to figure out right now. Are we going to hold 557 to 560 and have one more move to the upside, before we get into the trickier part of September, which is closer to like the blackout period where stocks can't do buybacks, September 14th, 15-ish.
So Scott, talking about a shorter time right now, we've seen, I'll pop your charts up. We've seen some, I'll say, usual perma bulls. Tom Lee coming in, getting a little cautious. I mean, looking at the short time frame here after NVIDIA's earnings last week, and not necessarily the disappointing earnings results, but the disappointing reaction to the earnings. Does this worry you about the overall market that some of these leaders, you're seeing some of the wind come out of the sails here?
Well, first of all, I got to say, I love Tom Lee. I like a perma bull better than a perma bear because historically the market goes up. But I think he was kind of irresponsible. Like, he was talking about we're going to have a 40% move in August for the IWMs, 40%, right? So that squeezed all the excess shorts out, got people all like antsy. And the IWM is, I don't even know what percentage off the highs. He was saying here, like, remember here back into the Fed?
Yeah.
This was when it was calculated. We had the first move on the CPI. And in here, he was still saying, we have another 30% before this breakdown. And now we're rebuilding here. And he's saying for the next 7 to 8 weeks, we could go down 7-8%. What just happened to his 40% call?
That's what I was saying this morning.
It's like, what the frick? Come on, Tom. You could be a
stay consistent.
Yeah, stay consistent. Or if you're going to change, that's fine. But when you're up here like this, don't be a cheerleader when things can get a little bit, out of whack. So I don't like when things like that happen, because same way, who was that Morgan Stanley guy that was bearish and right like 2 years ago, and then he stayed bearish for the 2 years back to us? Mike Wilson. It's like, so you have to say to the traders, guys, you can't fall in love with analysts because, they're talking out, they're not trading, they're not making cash flow monthly or quarterly. That's our jobs. So that's why I keep the TV off for most of the time until 9 o'clock, and then just have it on for background noise, because, a lot of them they just don't do what we do short-term and actively. So like you said, NVIDIA. So let's go to the SPYs real quickly, because this has been a tough range, right? Here you go. Like I was saying before, you had this V bottom. This was easy for us kind of traders, as it was buyable. The VIX was through the roof.
Yes.
We're 10% off the highs. That was the, calculated trade. That's when I bought the blood in the street account. And then this is when it got really tougher. I don't know about you guys, but right around this 540-ish, where people like, that's where we're going to at least pause. That's where I started to get a little extra hedged. And then you went up another 4 days in a row. So that was like that spot. I feel like the pain trade started. So anyway, here we are above the 8-day, 1, 2, 3, 4, 5, 6, 7, 8, 9 days of hanging here after a fast and furious move. My experience tells me, we probably should break above this range because we took back all these levels so fast. But, there are some things that could hold it back. The spookiness of September, whatever, which I don't think happens till mid-September. But then again, like you said, is the SPYs going to be able to break out if NVIDIA wants to see, 108? It's going to be hard, right? Hard for the SPYs to break out above this area. If this 116 area, I'm watching this 116 today. If it breaks this and stays below and works to 108, chances are the morning weakness isn't going to get absorbed. So that's like how I'm looking at it a little bit. Maybe it breaks below it and then comes back above it. That could relieve pressure. That's that red dog reversal kind of bottom tail trade. If it happens, that would be like something like this. It goes below, shakes people out, and then comes back above. And then maybe you have like, a low, a higher low, a higher low, and then it gets better. But if it's going to work its way down towards 108 or lower, chances are the semis are going to continue to lag, tech's going to continue to lag, and the S&P is going to be in this choppy range. So that's how I'm kind of framing my week.
It sounds like you start the week a little bit cautious then, Scott, like until you see a signal that you can get more aggressive, correct?
I came in long because of the way we reversed and the way this range was on Friday. And I'm kind of cautious, saying I don't want to lose more than I need to if it was a trap. I don't know, like, did you guys come in net long? Are you net short? Are you net neutral? For me, I'm net long. What?
Yeah, I came in neutral today, but yeah.
Okay, well, if you're in a better spot than I am.
Well, no, but that could change in a hurry.
I'm just saying.
I'm usually neutral. I'm usually neutral overall, though. I try to trade market neutral most of the time. But
really,
I mean, I'm looking at it's a tough. But what you were saying before, like, and I was just actually in the background. You were talking about the August 5th blood in the streets, and I was just looking at my own performance for August. And it's funny that August 5th week was my best week of the year. That August 5th day, or was it the 6th? I don't know if it was the 5th or the 5th, right? 5th. That August 5th was my best day of the year. And then the next week was pretty good. And then the last 2 weeks kind of sucked. So I'm like, it kind of went with exactly what you just said, Scott, is I went from this month, August is going to be awesome. Just had my best week of the year. And then the next week was pretty good. And the last 2 weeks sucked and I didn't even beat my March. And I'm like, well, how the heck did that happen? It wasn't, it just wasn't, the last 2 weeks have been tough.
Well, you had the last third of the up move that constructive or risk averse or even prudent guys like us have been doing this, we're like, okay, maybe we can catch the other side a little bit and got hurt. Then finally, when we start to settle after 4 days, like, oh, now we can go up and didn't, or we got to go down and we didn't. So I get it. And I've spoken to a lot of traders. Like we have, we have over 900 or maybe even 1,000 associated members of our BD for prop trading. And, like you said, a lot of our guys, while the world was in pain or worried about their statements, we were out of the way short into August 5th and then made good money. And then while they're all excited, we're back to highs where, the market's up and you come home and your wife's like, how'd you do today? The market was up and, you lost money because you're trying to be cute overhedged with a short. So, a lot of people said the same thing. I spoke to my friend Pete, who was one of the biggest billion-dollar funds in the world. And, he's been having trouble. He's not doing it there anymore. He's just managing his family office and he's having trouble. So a lot of people that I know that have been doing this for a long time did not have a great 2 to 3 weeks. So I'm not trying to be like misery loves company, but that's how tricky,
it's been the last 2 weeks.
And my trading spirit's a little down, and I'm like, so I'm trying to think to myself, what do I do here now? I'm like, if we do not hold 557 today and we close below, which I'm not going to say has happened, I might have to just wipe out a lot of my positions and stuff and say, hey, I'm going to just day trade for a little while because, I don't want to lose excess money for no reason. I don't want to be anticipating a move above 563, 564 and be in 6-7 names and it not happen because we roll over because more people are looking for that now. So my trading hat saying, okay, what am I going to do to keep myself mentally positive and on alert to make money and piece it together until we get better trading action, which whatever that means.
Scott, I was just, looking at the years that you talked about, 2000, 2008, 2020, and now we're in 2024. All those presidential election years, right? All those years and different things. How do you, we could talk about the charts and we could talk about the fundamentals. We could talk about the valuations, the S&Ps here, but I think that all these times, those were great buying opportunities, right? With the crises and everything. How do you keep the geopolitical? We are at a point in our country and our world where you would think things are you should be extremely bearish, the way things are transpiring. And I think you know what I'm talking about. How do you separate all that when what kind of potential risks are out there?
Well, it depends on your account, depends on your risk, depends on your threshold. If I'm 51 years old and I have a 401k, then I put money in every single month as a chief strategic officer, I don't care. It'll help my average cost the same way the other crisis has happened. But as an active trader who trades for a living, if things start to get temperamental, you go back to the chart, before the 9% move lower, look at this candle on July 18th. We broke the 8-day moving average. We had a gap down that never got filled. So technically it said the market cares about whatever the narrative was then. And then we're below all the moving averages the whole way. Listen, the other presidential elections, the same thing happened. They said the world was going to end when Trump got elected. It was down that night and then never looked back. They said the world was going to end when Brexit happened. The world was always going to end, and it doesn't end. You just need to know how much risk do you have on. I tend to take more options when we get into areas that anything could happen because risk is premium paid versus being caught in a mess that you can't control. So as traders, maybe you have a little less on because there's enough volatility that if you get paid for the month, you could short a huge gap up, and if it doesn't pull in, you could flip and buy them and use your charts. And if big gap down, you could do the other, and you could make money tactically. So I would say when we get closer to these binary events, whatever they are, and it's going to probably be the election when we move closer. First one now will be the jobs report on Friday because the street thinks we're still getting 1 basis point worth of cuts, and looks like we might get a quarter in September. And I don't think we can get 1 basis point unless, Tom Lee is now changing his gears and we're going to go down 6-7%. At 6-7% down in October, hey, maybe we go a quarter then a half because of sentiment. Remember when we were down August 5th, what's his name on TV was crying for a 1 basis point cut that day, and we were still up 11% in the S&P. What the hell is that? So, I'm just thinking that, these binary events happen. You just have to know which account you're looking to focus on and what's in harm's way. But long term, it doesn't matter. Obviously everyone thinks like, I don't want capital gains taxes to go up. I've paid 50% all in a bunch of years. I want to keep more than half my money. So I'm capitalism, free enterprise. I like to help. I'd rather pick which charities I want to give to than them take my money and distribute it whichever way they want, whoever that is. But I'm not going to name names and get political. What do you say, Joel? Do you want to keep some more of your money, or you want to give more of it away for the greater good?
You know where I'm at. I'm also quite a few years older than you, and have been, in the markets, well before 2000. So, that's just my viewpoint. If Dennis thinks he's conservative, I'm even more conservative of him. Not selling stuff, but just the appetite for buying is just not there.
You're a little older, Joel. You might need to, do more bonds. No,
So
what's wrong with that? What's wrong with 5, 6, 7%? I don't understand that.
Scott,
there's nothing wrong with it. I'm just, if someone's 30 years old, I wouldn't be looking at 401k.
Yep,
because
exactly. That's exactly.
Because the election's happening.
Yep, time perspective on things.
Yeah, exactly. If somebody's 77 years old, not saying you are, you look not a day older than 45, but maybe a little older than that. If you're 75 years old and we're 1% off all-time highs and you're worried about how much you're going to live on, you know what? You take your equities down, over the next 3 to 6 months just in case, because you don't have the same time horizon as, somebody in their 30s,
Excellent.
40s, or 50s.
I agree with you. Excellent. Excellent way to handle that, Scott.
Scott, next week, I know we've got some fireworks. On Wednesday, we'll get the CPI report. Looks like you'll be holding a room that you're going to be talking about trading into and after the CPI report. We've got that QR code on the screen. We've also got the link in the description of the YouTube channel. I'll drop it in the chat as well. But what are you going to be, looking at next week as we head into the CPI report?
Well, let's see where we are. Let's see, are we at above 564, 565, near 570, or did we pull back towards below 557, 554, and 5, and at that gap? People are always like, what are you going to look at in 2 weeks from now? 2 weeks from now, the world could be a different place. It could be a different place in 2 days from now, technically. So we'll see where we are. We'll see where it is. And for around here, hey, you got to look at the small caps. You got to look at the bios. I personally think the bios are set up for higher prices. So that's one of my bigger positions right now. But, it also feels a little vulnerable like everything else. So if you look, let me go, I'm a trend spider right now. Let me put up the XBI. Here's the XBI. Here's your inside range. It looks like a much bigger cup and handle pattern. I would think if we're going to hold in here, and if we're still in a little bit of disinflation and we're going to get close to 1 basis point in cuts or 75 basis points, whatever is 100, I'm sorry, that, we could get above 102, 103 in the XBI to get a better move. You would think. You look at the weekly chart too. The weekly chart, this was 174. In 2021, it was 124. Now you're hovering right here. I would think that this could be a good spot if that narrative plays out where, inflation continues to come in, the Fed could reduce rates. I would think that this sector would be a good sector to focus on, for the fourth quarter. But that's a lot of things that have to happen. But we'll see where we are next Tuesday, which feels like, miles and miles and miles away for now. Let's see what happens today.
Well, there you have it. All right, Scott, always a pleasure to have you on Pre-Market Prep with us. Again, Red Dog coming to us from T3. We love our T3 Tuesday. Scott, enjoy the rest of your day, and we'll catch up soon.
Thank you very much. And listen, if every day, if you want to get the active complexion, see what's in play, where we can make cash flow, you come to T3 Live. We have people on the alpha teams, over 500 professional traders that are trading for a living, trying to time things. We all do it together. There's strength in numbers. You don't need to do it by yourself. There you have it. All right, Scott, we'll chat soon, and take care. Stay green.